So Occam actually kind of helped me with the next thing I want to touch on, which is the EMA. EMA stands for Exponential Moving Average, and I think it's arguably the second mostly used moving average. Uh, and before we go into the definition of it, let's just take a look at the chart itself. And you know what? Let me hand it over to the audience while I hydrate. What do you guys think the exponential moving average does differently from the simple one? Anyone?
It shows the more current price action versus the older price action as it moves through time.
Well, holy shit, that is exactly what the exponential moving average is.
I
Uh,
guess it's worth explaining why that
yeah,
is, Fab.
yeah, exactly. Sorry, I just choked on myself. Um, so the exponential moving average, it is precisely as you said, it favors more recent data. And I kind of don't want to delve into the maths of it too much because I believe it will just confuse people. But kind of like how I mentioned earlier that a simple moving average just takes the sum of the numbers. With a exponential moving average, you have a coefficient to each one of the data entries to give them a weight, so to speak. And they're weighed that the more recent entries are weighed heavier, right? So you can just forget all the sentences I just said and just remember what Scrap said. More recent data is considered more strongly when calculating the moving average. Verde is our math guy, so correct me at any point.
You're good.
Okay. And you can really see this come together when you're just looking at the chart itself. You can see that kind of like how we had the blue lines, that the darkest one is the slowest one. The red one is the 200 EMA as opposed to the SMA. This is the 50 EMA and this is the 20 EMA down here. Now everything we said earlier about shorter moving averages crossing over longer term ones, in many ways you can also look at it in between the EMA and the SMAs. Just a second. Sorry, just had to cough my lung out. Anyway, so this is something that Occam's touched on in his amazing explanation. Succinct as always, Occam. True to your name. But when you have these two fundamentally different moving averages coming together, this is a very strong sign that the price is consolidating, really. Even more so over here. You can see the price is bouncing around, as we said earlier, but let's just look at the moving averages for a second. It is undecided no matter which resolution you're looking at in terms of these two. It's coming together. There's no clear direction. Not the exponential, not the simple one either. So let's just kind of forget about this section for a bit and just think about when should I be using a simple moving average and when should I be using an exponential one. And the answer is it depends, as expected. As you can see, I'm using both when I'm looking at the chart because sometimes the EMA by definition reacts a bit faster to changes in the price action, but the fact it reacts faster also means it's more susceptible to errors, you know? So a small, let's say a very short-term movement can throw a longer-term EMA with greater ease than a simple moving average would be thrown off. Did that sentence make any sense, or should I repeat that? Can I get some confirmation here?
Repeat but slower.
Okay, let me repeat that. So we said an exponential moving average favors recent data more strongly than data that is further back in the price action. This means that unlike the simple moving average, which treats all the data points the same, all the closing prices in the relevant period of time, rather than take them all as the same weight, it looks at the more recent price action and gives it more weight. It reacts strongly to it. So this means that if I take a moving average of a given length and I plot the simple and I plot the exponential one, the exponential one is going to be far more reactive to price action than the simple one. So on one hand, this is a good thing because this can give me a faster indication that price is going in a direction. You can see here, for instance, the price crossed the EMA, the short-term EMA, way before it crossed the simple one. But being able to react faster isn't necessarily a good thing, because it can also mean that a short-term movement, like this one when you're looking at the long-term, more severely impacts a long-term EMA than it impacts a long-term SMA. So this could mean you get more false signals out of an EMA than you would with a SMA. Did that make sense? Or did I just melt
No,
everyone's brain?
you wrapped it up with the correct terminology. You get, with EMAs, it's a faster signal, so you're going to get more false signals. So that's why you're comparing your fast signals with your slower signals, which would be, in this case, an SMA on the chart,
Yeah.
to give you confirmation of trade. So your SMAs are going to give you less false signals. EMAs will give you more false signals.
Absolutely. Precisely. Did everyone else get that? Let me just have a look at the chat. Give me a thumbs up if that meant something to you. It moved exponentially, lol. Fantastic, my 2-star students here. Okay. I'll just assume it made sense, and otherwise you can go back to the recording. Where'd my trading view go? Oh, there it is. Okay, so as always, Akam once again kind of alluded to the next thing I want to talk about, which is the MACD. And the reason I'm going for the MACD specifically is because all this time we've been talking about moving averages and how we can learn or gain insight from the way they move in relation to each other. And then Akam just did a whole finish him sequence by saying that the relation between a longer term and shorter term means one is going to be more aggressive than the other can tell you whether the movement is confirmed. One serves as confirmation while the other one sort of just signals that something is happening. And in a way, this is what the MACD, which stands for Moving Average Convergence Divergence, this is what the indicator essentially tries to tell you. Let me kind of zoom in on here. Okay.
You can double click on that one as well.
Yeah, I wanted next to the price action. Can I just mix it somehow?
I see.
Yeah, you can open up your object tree and you can drag the MACD up into the same object. I'm sorry, the same layer as the ticker.
Whoops.
So you open up your object tree on the very bottom right-hand corner.
Bottom right-hand corner.
Yeah, on the panel, that one.
There you go. There you go. Yeah. And then take your MACD and drag it up above that solid line that's right above it.
Aw,
There you go.
yeah.
And now if you want to move it to a different price scale or the same price scale, you can start to right click and pin your scales the way you want. But I assume that's probably the way you want it right there.
Yeah. Yeah. This is perfect. It might be a bit too much, actually, you know? I would...
Maybe you want to hide your moving averages.
I
Unless,
actually purposely want them at the same time.
Okay.
Wait, how did I put it in its own thing now? Uh,
Yeah, you right click, new pane.
New pane below. Ah,
Yep,
yeah, there we go.
there you go.
Thank you. Okay, so now that I'm done clowning around, let's look at the MACD in relation to the price action and the moving averages specifically. So let's look at the blue line here first. Okay, so the blue line is called the MACD line. What is the MACD in essence? The MACD is a subtraction between two moving averages. Now, before we kind of break apart what the calculation means, let's just remember what we intuitively learned here. And this is an open question to the crowd again. If I have a longer term moving average above a shorter term moving average, what did we say this tells me? Who are my star pupil?
Me again? Should I say something?
Yeah, yeah.
You mean it's a less strong trend?
Actually, in this case, this is a strong downtrend. And why is that the case? Because the longer term one is over the shorter term one. If we want to put this on in an equation kind of sense, then the difference between them and the sign of the difference tells us which one is over the other. So in this case, if I were to take this moving average, the value of it, so let's see, the 50 SMA here is 16.6, right? And over here, the 200 is 26. So if I were to subtract the two, I would get negative 10, correct? So when I just look at the value negative 10, it tells me several things. But first and foremost, it tells me, without even needing to look at the chart, that the longer term moving average is above, it is greater than the shorter term one. And if we look over here, so in TradingView you have various parameters, but the MACD does exactly what we just said. The way it's calculated, the MACD line anyway, we're not going to talk about these ones just yet. Let's just look at the blue line. So the blue line, the MACD line, is calculated as you take the shorter term moving average and you subtract from it a slower moving average. So when you're looking at the context of the MACD, you call them the fast and slow moving averages, and they are typically exponential moving averages. The MACD is a very reactive indicator, generally speaking, and in my case I made it even more reactive. But typically you take a 12 EMA as the short-term EMA or the fast one, and the longer term or slower one is typically 24 periods.
26.
26 is it? Right. Okay, 12 and 26. And thank you. And I took 21 as my slow one and 8 as my fast one, just because I like to be a bit more aggressive and reactive, since I typically take scalp plays. But forget about the numbers for a second. Remember the concept. The MACD is just a quantitative way to describe what we saw with our eyes here. You take the value of this moving average and you subtract from it the value of this one. If the value you get is negative, without looking at the chart, it means that this one is under the slow one, and therefore you're in a downtrend of sorts anyway. But it's actually more than that, isn't it? So the sign of the result tells me where they are in relation to each other. But we could just as easily have this kind of scenario, don't we? Where one is heading up and the other is heading down. How would this look like on the MACD? That would look like with a greater rate of divergence between the two. So when I say these two, I don't mean the signal line. Well, not only, but I'm just looking at the blue line, as always. So this blue line being a derivative of these two moving averages, its sign tells me how they are laid out in relation to each other. But there are other things to look at here. First and foremost, how fast is it moving? The speed at which it moves is telling me the rate of divergence or convergence of these two moving averages. If it's moving at a constant rate, kind of how we can see here with these two, it kind of plays out here as well. It's moving at a constant rate. They are moving towards each other at a constant rate as well. But there's also the direction towards which it is moving. Just at a glance, we can see here that the MACD line was going into a more negative value before becoming closer and closer to zero, so a lesser negative value. So just to reiterate that, to make sure everyone is on the same page, we said that the negative sign just told us how the moving averages are laid out in relation to each other. But the way the MACD itself is moving is telling me how these two are moving in relation to each other and the direction to which they are going. Is that clear to everyone? Let me look at the chat. I see yup. That means I'm the best math teacher. My question is, wait, there are several things. Would it be wrong to think about it in a mathematical graphical sense as well? When the price action is moving like an exponential graph, the EMAs may follow closer with less false signals than the simple moving average. Yeah, but in the real world, you typically don't get these perfect graphs. You know, you kind of this is where you as a human come in. You have to look at the price action and tell for yourself which one is more indicative of the price and which one should be serving as a confirmation signal. Because when the price is more volatile, the exponential one is going to be going all over the place. In that kind of scenario, I would be preferring the longer term simple moving average, which is more smoothed out, as sometimes you might hear people say. Generally speaking, when you hear people refer to smoothed out indicators, it's typically a simple moving average of the indicator, and it's to kind of remove the noise of volatility from the overall trend. My question is, if you are looking for a short-term swing move, do you personally use the more stable SMAs or do you prefer EMAs? So I look at both EMAs and SMAs. And if I'm looking for a short-term swing or scalp, you know what? Let's look at a real example. Okay. This is BBIG. I recently took up a position in BBIG. Okay, there we go. This is going to be an extremely short-term play for me anyway. And here are the reasons. If you look at the long-term moving average, the very long one, not even the EMA, the SMA, it's kind of undecided, but still overall bearish, you know? It's sort of consolidating around this price area. So let me just zoom out so it's a bit clearer. You can see the 200 SMA is sort of hanging around here. But overall, it is serving as resistance for the past couple of months at the very least. So when I'm coming to look at this play, I'm not looking to stay in it for the long term. I'm looking at a shorter term one. And the EMA being way over the price action is confirming the same thing for me, right? So far, I'm just looking at time frames, and both EMAs and SMAs are confirming the same thing. But let's look at the shorter term, since we just established that a longer term play isn't here. There we are. Okay. So medium term, we're still underneath the price, but you can see that the price is egging ever so closer to them. But more interesting are the short-term ones. After this gap down here, it was just a matter of time until we head on closer here. until we're going to have to be breaking through it. So what happened is that last week, right around here, you can see that the MACD crossed here, but let's just forget about it for a second. Right about here is when both moving averages sort of curled up and the price started kind of messing with it during the day. So in pre-market, I took a position for 195, right? This was just about the best entry I could snag. But the fact that both of these flattened out and they're in agreement with each other, and notice here what happened. This is the moment that I started looking at BBIG. The EMA crossed above the simple one. Like we said, EMA reacts faster. Notice that in relation to your original question, I was looking at both of them the entire time. The moment I was looking at BBIG is when the EMA crossed over the SMA in the same period of time, in the short-term one, because this tells me that we're kind of bottoming out here. And indeed, within like 4 days, we bottomed out here for several days. Price never broke under this. This is a whole different story, but the fact 190 is like all-time low and rarely got pierced. There's everything TD said, which just further confirms with the liquidity pools here. There are many other reasons to consider this a place to take a position, but I'm purposely ignoring the rest of them. I'm just looking at moving averages. Moving averages wise, this is where I start looking at the play. When it flattens out here, this is hinting at a change of momentum. I took a position here, and I'm just kind of writing it out, and I'm really waiting for next week to see what happens when we touch with these ones. So to answer your original question, which I absolutely missed, I use both SMAs and EMAs, and I use how they react to one another when making a decision. I hope that answers your question. Just give me a second, I need to hydrate.
Everyone should consider hydration.
Slurp. Okay. Okay. It's never simple and my answer is perfect. Ah, thank you. Yeah, it's never simple, but I really want to keep it simple. That's my mentality. Gotta make the most use of these 4 wrinkles. Okay, let's hop back to AMC. Okay, so we were talking about how the MACD is a subtraction of the slow EMA from the fast EMA, and how the sign of the result tells you whether the slow EMA is over or under the fast one. A negative value tells you the fast EMA is lower than the slow EMA and vice versa. Pardon. But we're talking about how the direction in which the MACD is going also tells me another story. So let's just look at the more trivial case. And this sort of will help everything come into place. What does it mean when the MACD turns from a negative value to a positive one? Audience. Scrap Queen, where you're up, my star pupil.
Could you say the question again? I'm sorry.
Yeah, the question is, what does it tell me when the MACD line turns from negative to a positive value? What happens when it reaches 0? What does it mean?
I'm going to say those 2 lines are converging over each other or merging.
Yeah, star pupil. Fuck yeah. Precisely.
Yay.
So when the MACD hits 0, that is the exact point that on the graph, the 2 moving averages would be converging. The reason it's not playing out here is because I have the 21 and 8 EMAs, and we don't have those on the chart. But you can sort of see it's happening pretty close to these 2. And this is exactly the place they converged. And that is why the sign kind of tells you what is the direction of the convergence. So as you just said very, very correctly, I need to send you some candy or something. When a MACD is approaching 0 from the downside, this is telling me that momentum is building up towards towards the slower moving average, which is on top. Essentially meaning we have a price that is below the longer term moving average, but it is egging ever so slowly towards it. Let's see this play out in real time. What happened with AMC here when we had this massive fucking pump? You know what? Let's look at it from here. So there we go. So from over here, we have a long-term moving average at 34, and the price was at 13. And indeed, the MACD is at a pretty low point here. Now, forget about the price for a moment. We're suddenly seeing this massive spike up in the MACD, and it crosses 0 here. What do you think happened at this point in time when it comes to the moving averages? Let's head on up here, and we can see that there is a clusterfuck of moving averages. Like I said earlier, you're not going to see a one-to-one move, but this is roughly the point in which the price went over the moving average, and specifically what you would be seeing with the EMAs the MACD is made of, that the 8 EMA broke above the 21. So why am I getting so hung up about the 0 line, how the MACD relates to it? Well, when you're coming to use the MACD as a trading signal, I'm kind of focusing on the long case rather than the short case here because it's a bit easier to explain. But what I'm trying to do is not only confirm a positive trend with the moving averages, but now I have this indicator that sort of consolidates everything I've been seeing up until now into a very neat, tightly packed value. So when I see this on the MACD, this is telling me there is strong change of momentum, especially when I'm seeing this kind of formation here. Any questions on why this crossover between negative to positive is so indicative? Or did that make sense? Let me go here. Yeah, okay, so no questions in the chat. Fantastic. Let me go back to trading view. Okay. So we've established this kind of movement from negative to positive is the crossover. It's the numerical way of expressing a crossover between what we saw with our eyes here. In essence, it's sort of a golden cross between these two moving averages the indicator is made of. So armed with this knowledge, this tells me several things that I can use to my advantage when trying to maximize my odds at success with this kind of trade. So let's say I want to take a long position. Now that I know this kind of behavior from the MACD is the numerical equivalent of a crossover in the averages, what is something that I would be seeing with the MACD that makes me want to not take a long trade? Let's get some examples. Let me shift this up so you get a hint. That is right, everyone. When the MACD is doing the exact opposite, that is crossing under from positive to negative, that is a sign to me, without even needing to look at the moving averages, that one just crossed, the slow one just crossed above the faster one. This is an immediate sign for me, especially if I'm trading with a resolution. I don't remember who asked about a shorter term swing play, but the MACD should probably be matching the resolution of time you're hoping to hold before going out of your position. So if you're holding for 8 periods, so let's say when I'm trading on the 3-minute, which I typically do, I typically hold for around 20 minutes. And that's kind of because the 8 EMA gives me a good resolution of about 24 minutes to detect a good movement. But generally speaking, if I'm seeing this in the resolution I'm hoping to hold in, and I'm seeing this drop from positive to negative, this is telling me the trend isn't in my favor if I'm looking to go long, right? So this is an immediate sign I don't want to be in the position. Now let's kind of circle back to this example from earlier. So we said we'd be taking a position here, and we'd probably be taking profit somewhere here, with the long example TD point out. But how can I maybe somewhat improve my odds? What if I wanted to be a bit greedy? What if the numbers didn't align exactly like this? Well, the MACD can help me with that as well. So you see here, kind of around notice that the moving averages converge. They crossed over way before we would have taken a position purely based on moving averages. These more aggressive ones, obviously with agreement from these ones, would have given us an entry somewhere around here, which is way better than all the way up here. But what about the profit-taking part of the equation? So if we look up here at the MACD, we can see here that it's flattening out. So we said earlier, when it hits 0, that means equivalence between the two. But what does it mean when it reaches a maximum value and begins descending back towards the 0? What do you guys think?
That's probably a good time to indicate look at your exit.
Precisely, but why?
Because it's getting ready to cross back down under.
Exactly. So let's kind of formalize it a little bit. So the direction the line is going hints for us what is the magnitude of movement between the two moving averages. Like we said, if it goes from negative to positive, it means that the faster moving average is approaching the slower one. But the other way holds true as well. When we hit a maximum value with the MACD and it begins descending, it means that from that point onwards, the faster moving average is approaching the slower one from above. Wait, I see there's something. I don't think I've ever had a more productive Saturday. Saturday, double trading education center, got 5 hours on the renovation today. Motherfucker, I live, you guys. Thank you. Oh. Aw, man. That's so nice. There, have a GIF.
Warm, fuzzy feeling.
Yeah, I felt something for a moment. Where was I? Right. Okay, so we topped out on the MACD. That means that is the absolute greatest difference you'll have between the two moving averages. Once the value begins descending back to 0, it means it's a matter of time until they cross over. So let's kind of recap what we can take away from the MACD and what it tells us about the price action. A crossover from negative to positive means a crossover between the shorter term moving average over the longer term one. So this is a bullish sign. A topping out MACD means that they've reached their maximum difference. Descending back towards 0 means the distance between them is shrinking, and it's in favor of the longer term one. This means exhaustion of the upwards momentum. So here's how I typically use the MACD. Just the MACD. I'm not even talking about the signal yet. I'm looking at the MACD line. I'm looking at a position like this when it's bottoming out and starts approaching 0. This tells me there is a shift of momentum. A cross over 0 typically means I probably missed my train. But just to follow a play, this tells me that there's good momentum. Maybe there's some money to be made. When you reach a top like this, this is probably a good time to start considering tapping out. And me specifically, I typically exit the moment it loses its steam. So I would probably exit somewhere here. I would leave all this money on the table just because I wouldn't feel comfortable staying in a place, even if there's a chance it could still fly, you know. But the moment I lose its steam, I don't know where the momentum is going. Trend is broken in my eyes. Screw it. I'm out. And this would be probably a good time to go short, by the way, because this tells you that the um, shorter term trend is showing weakness and it's approaching overall excuse me, COVID, and it's approaching a downtrend. Now, with that said, let's finally have a look at the orange line. Wait a second, let me look at the chat, just making sure there are no questions. Yeah, no questions. With voice, anyone? Questions? Anyone? No? Okay. Back to trading view. Okay.
You need
So,
multiple screens, man.
I do. Maybe if BBIG plays well. Or Biora. Fucking Biora.
I have one quick question. You said that your lines, your signal and your MACD line are different from your moving average lines above of the same color.
Yeah.
But if they were set to the same settings, would they be in alignment?
Yeah. Yeah.
Okay, thank you.
You know what? Let's see if we can. Was there a period in time there was something interesting? Okay, here there was. So there was a cross here. So let's actually just do it here. So I'm gonna change the fast one to 20, and the slow. Let's take the orange one. Oh wait, actually, which one was this? Is the fast one. So not 20. I need this to be 50, and this is 200. So, assuming I got the right numbers, is this 20? This is 200? 20, 50. Okay. So actually they're not crossing here at all. So they both, there it is. Okay, yeah. So that's roughly where it is. So you can see that the moment these two crossed underneath each other is when it went from positive to negative. See? I mean, I don't know if you can see it. Let me just zoom in a little
Yeah,
bit.
I do.
So yeah, the moment the fast one crosses the longer term one, I go negative. Let's see if I have it on the other direction. Yeah. Do I? Do I? I do not. Whatever. But yeah, you can see it plays out pretty much. But yeah, since I typically don't trade uh, in these kind of constants, I use these for overall trend identification because I don't want to trade against the overall trend. That I mean, you can do it, but you're just making it more difficult for yourself. Um, oh, I was on BBIG even. I wasn't even on AMC. Whatever. Um, so you can take those trades, but trading against the long-term trend, or let's say the longer term in your time resolution, is more dangerous. So let's say in this case, yeah, trading against a very negative medium term is it's probably a bad idea. Or rather, you have to make it a much shorter period of holding. So when I played AMC here, I held it for like hours at a time when the short-term trend was agreeing with me, you know? Okay. I have been doing yard work most of the day. I was going to jump in the pool and cool off. Decided to check this in. Now sitting here drinking Lauren TA. Ah, ah, bitch. Thank you. Heart. Okay, so let me just make sure. Yeah, so this is the last thing I have on my list, and that's talking about the signal line. So the signal line is actually, brace yourselves, it's a moving average of the MACD line. So much like how we said a moving average up here is a moving average of the price action, in this case the closing value of each candle, the signal line is a moving average of the blue line. Can anyone guess why would anyone do this?
Change?
Yeah, yeah, change, but what specifically about change?
Still thinking.
I'll answer this one.
Yeah, don't know. I don't know.
So, when we looked at the moving averages in the price action, what did how the MACD move in regards to it tell us? Or rather, how did the two moving averages relate one to another? So a short-term one going above a longer-term one was bullish, correct? So let's kind of open this as a hint and let me hydrate for a moment. Okay, hydrated. So the signal line is an exponential moving average of the MACD line itself. When the MACD itself crosses over its average value, that means the MACD itself is showing strength in relation to its past values. When it falls underneath it, it's showing weakness in relation to itself. Let's see how this is kind of parallel to the price action. So you can treat the signal as a long-term moving average, and the MACD itself as a shorter-term one. And we said when the shorter term crosses underneath it, that is a sign of weakness. And when the shorter term trend is heading upwards, you would see an upwards cross between the two. The same holds for the MACD itself. If the MACD crosses over the slower moving average of itself, in a sense, this tells us that the signal the MACD produces shows a difference in momentum. In this case, an upwards cross is a bullish one. And this is typically one of the most widely used signals of the MACD. When people say it curls up and it's crossing over, this is what they refer to. They refer to the MACD line crossing its signal line. But now that we know what moving averages do, we understand furthermore when we should be taking this sign and why it means what it means. A crossover to the upside of the MACD line over the signal line indicates a strong change of momentum between the shorter term moving average over the longer term moving average. This is just by looking at these two squiggly lines rather than all of these. So everything we set up until now was still right. When I'm taking a trade, I'm still looking at all of this. But the first signal I'm looking at to see if there's even a viable play, when I'm going long, obviously, in this case, is this kind of cross. When I see this cross, I'm seeing trend is starting to move in my favor as a long trader. So only when I'm seeing this do I want to head over to this chart and see what kind of conditions I'm going up against. So only when I see this do I go in here and see, oh wow, so I have the price crossing over the 20 SMA and the 20 EMA is coming up. But I'm underneath here, I'm sandwiched here. Do I want to take a position? I'll wait another few days. Will I not wait a few days? All of this started with this crossover. Just this crossover alone tells me there was a change in momentum. And as a trend trader, that is just about everything when it comes to making your first step.
I don't know what.
And when I hit this spot here, as a trend trader, this is a good exit sign on its own, without even looking here at the fact it topped out. Just trading this stupid signal. It topped out. This is the end of a trade, as far as I'm concerned. So you know what? Even if I left some money on the table, I may have not maximized it, but I didn't need to make that much analysis to tell I made some kind of profit along the way. Now, I'm not meaning to say this is a be-all, end-all. There's more to it. Notice I took this signal when it was negative. Why would I take this signal when it's negative, and what kind of risk am I taking on when it's positive? Let's see if we can find an example in the meantime. Yeah. Yeah, let's look at this then. What do you guys think about taking this trade right here? This cross up until this flat out up here. Given everything we talked about, would you take this trade?
Sorry, just a suggestion. If you maybe want to use the replay option.
Replay option?
Yeah, so you can replay the chart.
Oh my god. Wow. And how do I play it backward, forward? One?
You click on the chart from the point that you want to, the left one, the left button. Yeah.
This
I
one?
think there tells you where to start from, and then you just let me check.
Oh, there we go. Yeah. Okay. Yeah. Woo! Fucking
And then you
cyber.
click on the chart at point where you want to start the replay, and then it prints out candles basically. Sorry, Scrap, I cut you off.
Oh, not a problem.
Yeah, Scrap?
What were you gonna say?
You were asking about the trade. I thought, would it be a risky trade? You don't have a lot of time and you don't know what the direction is because it looks like the price action is hugging the moving averages above.
Yeah. So actually, I need to take one more candle, and then the question. One more. Okay. So you just saw this on the graph. So there was a small cross here. What are the pros and cons to taking a trade? Just based on what you're seeing up here with the moving averages and with the MACD here.
Are you asking me again or just in general?
I'm asking anyone who wants to participate. But you're my star pupil, so it's first and foremost to you.
It's fine to be wrong, so I would rather, and I guess Flabber would rather hear wrong answers only here.
I see that it's
So
moving in a candle. The green candle is above. It's the third green candle, and it's above the histogram bars. I don't know if I did it right, but it looks like it's possible that you could see a little bit of an upward trend because you have the longer term crossing over, or the shorter term crossing up over the longer term moving average on the MACD.
I actually didn't hear much of what Scrap said. I'm sorry.
Oh, no.
your screen looks cluttered. Flabbergang. Clean up the screen a bit.
Clean it up.
Mm-hmm.
From what?
So Mo says he's lost.
I'm hearing just a little bit of interference all of
Oh,
a
sorry.
sudden.
The chart looks too cluttered to me. I'm lost. Okay. Too cluttered. What can I clean up here? I have the MACD and I have the moving averages and price action.
I guess you have too many moving averages.
Okay, so let me maybe hide some of them. Actually, no, that's the entire point. I'm trying to see how we're combining both of these.
But if you hide them, then you're not going to be able to put the point across.
Yeah, exactly. So I don't want to hide them.